Today we're going to talk about the pound because it is getting very close to breaking out from a key level that I've discussed over the past few days. So I'll share with you exactly how I'm positioning myself. I'll talk about the position that I'm in right now and how I plan on managing that over the coming days. We'll talk about targets as well as an invalidation area. So if you guys do enjoy this content, be sure to subscribe to the channel and click the bell icon for notifications because I am putting out these videos every single weekday in addition to those weekly forecasts on Saturday. So be sure to click that bell icon too to get notifications so you don't miss out. Now, one last thing before we get started, none of the content in this video or any video is financial advice because it is just my opinion. All right, so with all of that said, let's take a look at the pound USD daily time frame. So this is the descending channel that we've discussed now for the past few days. You can see where the market, ever since back here in early 2021, the market has been moving within this descending channel. Now it recently came off of support down here right around 130, and it has bounced pretty significantly all the way up toward 132. So about a 200 pip bounce as of right now. But what I want to talk about today is what's happening on the 4-hour time frame. All right, now before we get started though, I do want to say that this is a case where the pound is getting close to breaking out. It has not broken out just yet. Okay, so I can't stress that enough. This is incredibly important because 132 is still serving as resistance for this market. Okay, so until we get that close above 132, the level is intact as resistance. Now, with that said, let me talk about what is going on here with the pound and what could send the market higher this week if we do get a favorable close above that level. Okay, so first of all, again, you can see where 132 is serving as resistance right now. So this latest 4-hour candle tried to get above it, but failed. Okay, it closed below 132 or right there at 132 really, and you can see where the market is starting to sell off right now. Okay, so last week, if you saw the weekly forecast, you'll remember that I got long down here at 1309. This was an entry that I did mention to members. So in the members area, I called out a long entry down here around 1309, and I got out at least part of that position, a good chunk of that position, right up here around 132 because I knew that that was going to be resistance. So I do still have part of that position on now. My stop loss is really pretty much break even down here around 1309. So if the market were to reverse lower down here, I would still come out with this with a net profit just because I did take a partial profit up here just below 132. Now, ideally, okay, if we do get that close above 132, at least a 4-hour close up here, preferably a daily close though. Doesn't have to happen today, it could happen anytime this week. But if we do get that close up here and flip this area to support, then we could see that move up toward 133.80, potentially 134 over the coming days. All right, because if we look at this pattern right here, there is the potential for this to be an inverse head and shoulders. Now, there are a few right shoulders over here, but you can kind of lump this into just one right shoulder. Now, it's unclear if the right shoulder is in or if we're going to see the pound come down here, retest this area, and then bounce from there, and then that becomes the right shoulder. All right, so this is still very early. Again, the market has not confirmed this as an inverse head and shoulders just yet. So as of right now, the market is still very much caught between 132 resistance and this 1309 support area down here. Now, if we were to see the pound close above 132 later this week, then we would be potentially looking at a move up there toward 133.80, which you can see is this low back here. All right, and we get that by measuring the distance from the potential neckline of this pattern down toward the low. So obviously it bounced at 130. We know the neckline is at 132. So therefore, this is a 200 pip pattern. Measure 200 pips higher from 132. We know we obviously get 134. Okay, which is also very close to that 133.80 level that I mentioned a week ago before this pattern was even here. But the reason this is significant is because if we look at the weekly time frame and go back here toward 2019, all right, you're going to notice that 2019, this area right around 133.80, 134 was resistance. All right, so it's very interesting to me that the objective of a potential inverse head and shoulders on the 4-hour time frame lines up exactly with a level that goes back to 2019. So that offers a little bit more confidence that if the pound were to get above 132, that the market is likely going to want to come up there and test that 134 area. All right, but once again, I know I keep repeating this, but once again, 132 is resistance right now. The market has not broken out just yet. Okay, so trying to buy the pound, the only reason I bought it last week down here is because it was at a key support area. And I knew that if there was any chance of this being an inverse head and shoulders, that really this area around 1309 had to hold up as support, which it did. Okay, but trying to buy it right now while the market is just trading between 132 resistance and 1309 is risky in my opinion. Now let's go ahead and talk about what would invalidate this setup. But before we do, guys, if you do enjoy the content, please smash that like button. It really does mean a lot to me. These posts and videos take hours to make. I don't ask for payment for this stuff, but if you guys can give payment in the form of a like, I would really appreciate it. All right, so what would invalidate this setup? First of all, 1309, I really want to see this level hold up as support down here. All right, because if we get a low down here, especially close below this area, right around 1309, then we do have this sort of downtrend that's developed. And so we want to see 1309 hold on a 4-hour closing basis. So as long as that's the case, then we do have the pound making these higher lows into resistance. Okay, so 1309 is going to be support. A close below that would look pretty bearish, and a move below 130 would obviously invalidate the entire setup that I just mentioned. All right, but really, ideally, again, waiting for the close up here is going to be paramount, and then that retest as new support. Okay, so this is what I'm going to look for to add to that position. Remember, my stop loss is pretty much at break even right now, and I did take some profit last week right below 132. But I'm looking for that close above 132, that retest as new support, and then this is where I'll look to add to that position. If we don't get it, then I'm not going to add to the position. And one last thing too, before we wrap up today, I do want to discuss the DXY, which we've talked about before, and this matters for the pound, obviously more so for the euro, but also for the pound against the US dollar. So the DXY is the US dollar index, and since May of last year, we have seen this market put in higher lows, higher highs within this ascending channel. Now, recently the market came into this massive confluence of resistance right around 99.40. All right, and that's significant because looking at the monthly time frame, you can see that we have this trend line off of the 2011 low. All right, so this was serving as support back here, and the DXY closed below it back here in 2020, and now we're getting that bearish, okay, rounded retest as new resistance. Okay, so this is very much a bearish retest as of now, but we do need to see the DXY hold below 99.40 and also start to carve those lower highs and lower lows, which so far we have not seen yet. All right, the market found support last week right at 97.70. So you can see this high back here, this low, and then of course, last week's bounce. So we need to see that close below 97.70 down here to open up that 96 area, which of course would send pairs like the Euro USD and GBPUSD higher. But until that happens, you do have to be careful when trading the euro and the pound, because right now we really just have a market that is caught between support and resistance. So a very range bound US dollar index. And so for that reason, that's why we're seeing the euro and the pound really just kind of move sideways right now without a whole lot of direction one way or the other. So for the DXY, again, 99.40 is going to be resistance. We need to see that close below 97.70 to really open up the channel support down here right around 96. If we got that, then of course pairs like the Euro USD, Pound USD would be moving significantly higher. If the DXY on the other hand takes out 99.40 up here, then all bets are off in my opinion for a move higher from the euro and the pound. All right, so that is it for today, guys. Just keep in mind, remember one last thing, I know I've said it a lot, but right now the pound is below 132. So this level is serving as resistance. We need to see that close above this area to flip that to support. My target, if we do get that, is going to be that 134 area. But until that time, I'm going to remain in my partial position from that 1309 level with a break-even stop loss. So I hope this content helped, guys. If it did, be sure to subscribe to the channel, click that bell icon for notifications, smash the like button, and leave your comment below. I will talk to you guys again tomorrow.